welcome to the EGROW Friday evening webinar series. Today we are very lucky to have the best minds in the country on MFIs. And I have been fortunate that I have known them for quite a few years. And today's session will be chaired by Mr. Subrata Gupta, who was earlier with NABARD and later on became the MD of NABARD Financial Services Bangalore. I've known him for maybe 30 years or maybe a little more than 30 years. Then we have Shri Uday Kumar. He's from Grameen Kuta. I've known him for nearly 10 years now. And there's a case study I've just learned being written on Grameen Kuta by IIM Bangalore. I'm sure it's going to be a great case study to be aware of and learn from it. And then we have Mr. Manoj. I've known him also for a few years now. So we have the best minds, and I'm going to give it over to Mr. Subhata Gupta to run the event today. He'll be chairing the session, he'll introduce the speakers, and he will conduct the proceedings. And I hope we are going to have a feast of knowledge, information on the microfinance sector, something which is so much at the ground level. We know it is important, but there is so little knowledge in public domain about. With this, over to Subhata Gupta, please.
Thank you, Dr. Singh. I think it's a pleasure and honor to be a part of this webinar organized by EGROW, and I would like to thank EGROW as well as you for inviting me on behalf of the panelists also. I would also like to welcome Mr. Uday Kumar as well as Mr. Manoj Sharma, who are the other panelists for today's discussion, and all the participants. I can see Daviji there. His name at least is flashing, so he must be there. And maybe as my senior keenly evaluating as to humne kya kiya hai in the past. That's a possibility. But to tell you frankly, of course, while I have been reading here and there a little bit about microfinance, I am out of the field because I retired last year. So I'm out. I'm not exactly in the field the way Mr. Manoj Kumar and Mr. Uday Kumar are there. Mr. Manoj Sharma and Uday Kumar are there. But I would like to, the topic, the role of microfinance in rejuvenating microfinance, micro enterprise in post-COVID era is something which really is an interesting one. There are few things which I would like to put forward here before I pass on this thing to Udayji as well as Manojji. A small example I will give here as to how much impact it has had at the poorest of poor level, because with respect to their income, with respect to their life, it has been really disastrous at some of the cases. One such case is a person called Santosh. He used to come over, and every Sunday he will be at my doorstep in our campus, and he will visit from flat to flat, and he will sell sweets. Now, that was his income. He was staying in the outskirts of Calcutta, something around 60 kilometers away from Calcutta. And he would come in the suburban train and he would sell sweets here. With COVID, the train stopped. For 10 months, he did not have any income. A week back, he came to my doorstep for the first time when they allowed trains to start for local people also to travel. Because earlier it was only emergency services who were allowed. And believe me or not, he was physically half of what I had seen earlier. That is one part of it. And he was practically in tears telling that he had wiped up all his capital and he had no money to start his business at all. I am talking about this clientele, these kind of people who perhaps need the maximum amount of help at this particular stage financially, to pick up the strings again and start off and work. But the issue which comes here is that the major model which we adopt in the microfinance Whether that will be sufficient to take care of this kind of a thing, because in JLG model, which we have adopted, we have come over from SHG to JLG mostly in the microfinance area. And JLG model is a very straitjacketed model, the way I see it. Like, for example, you form a small group, they are jointly liable for the loan which has been given, and you give the loan to them. But the point is, this particular person, or there are activities, or there are areas, or even in the groups, you may find the activities which 5 people have taken are different, and maybe 1 or 2 of them have been badly affected, whereas the rest of the 3 are managing with whatever business they were in. So in that case, all the 5 may not need credit. The way the cycle used to go on may not go. So one of the things which perhaps would be required, and we can discuss about that, is some kind of an improvement or some kind of a thinking thought process which need to go about regarding product development and thinking of a new product for the clientele which is whom we want to address through microfinance. I personally believe that the old SHG model is a better option in such instances, because in that the group used to be given a loan and the decision making was left to the people as to who wants money and who doesn't. Now that sort of a thing does not happen mostly in JLG. I'm not getting into the comparison of the models or anything of that sort. That is out of the bound of this particular discussion. Idea is that we have to think forward and think of an alternative for people like Santosh to get money, start their business. They cannot, like in this case, perhaps he came over, he knew us as customers, he came to us, he borrowed money, or some of us gave money to him just like that. You start off your business, he needs something around 15,000-20,000 rupees, and he will perhaps manage. But there will be hundreds of others who perhaps have lost business, and they will not be able to go back to their customers for asking about it. Simply speaking, people who used to sell puffed rice, I mean, that's a common thing in suburban trains in Calcutta. If you go in suburban trains, wo masala muri jo bolte hai na, that is something which is generally consumed and served by people. Now, these people, they have been out of business for 10 months. So you can well imagine where they are now, either doing something else altogether. That brings me to the next point, which is, even if they borrow at this particular stage, will they be able to sustain, or will they be able to service the loan? So that means at the interest rates at which perhaps it is being given. One of the observations which I would like to make here is that while last 6-7 months, what I've observed on the basis of little bit of data which I get being in the board of DAP Samruddhi, is that the cost of credit has been going down for the microfinance institutions because the overall interest rates are going down. So the cost of borrowings for the institutions are going down. Now, if the cost of borrowings are going down, is it really going, that benefit, is it being passed on to the customers at the grassroots level? I don't think so. Based on the little bit of feedback which I have, maybe that is not happening to that extent. It could be possible that because I have also got older borrowings, which are much more costlier, and so perhaps that does not allow me to bring down the interest rates to that extent. Maybe another 3-4 months or 5 months, we can see that kind of a change coming over. That is one area. Other than that, there is another area which perhaps needs to be looked into, and that is technology. I think Manoj will be a better speaker on that area. We will be talking about that later on. Maybe technology can help us in reducing the interest rate to some extent, because just like we are talking about maintaining social distancing, can we also think slightly out of the box and think of contactless, maybe microfinancing? That's also possible. There are, I will give the example later on, because I think initially I thought I will just introduce the topic. So I personally believe if we want to really, microfinance institutions really want to make an impact on rejuvenating the micro enterprises and the small and the very small enterprises, there are 3 areas which we need to look into. One is the product, one is the cost or the price at which we are serving that particular product, and the third is obviously using technology perhaps to maybe make the rollout faster, or maybe make the process faster, or also making the systems much easier for us to handle, which will enable us to further reduce the cost. I think these were my introductory remarks with respect to the discussion which we are going to have. I would now leave the forum to Mr. Uday Kumarji, who is with Ramin Kuta, and he's a very well-known personality in the industry. So I think, and he is much more closer to the field at present than I am. So he will be able to give you examples as well as about his product thoughts on this particular issue which we are talking about. Thank you.
Thank you, sir. Thank you. Good evening, everybody, and thank you, EGROW and Professor, for giving an opportunity to be part of the discussion. Pleasure to be here, and microfinance is core of our business. Economic impact of COVID pandemic on Indian economy is well known and has been discussed and debated in all forums. The striking elements of this pandemic-induced economic crisis are: we are in true recession in many decades. Our GDP dip in the first quarter is the deepest we ever seen in over 40 years. The year will end mostly with all overall negative GDP growth of 7.5 to 10% based on various estimations. In an optimistic scenario, we may return to pre-COVID levels of economy in after 3-4 quarters, probably. Many specific businesses are still not taken up. We can have many examples of ecosystems here, and inequalities increasing due to this pandemic, which is understandable. In all of these, different segment of population got impacted differently. Certain salaried segment, including government employees, possibly had not much impact in terms of their personal financial situation, while certain formal and informal employees, migrant wage earning segments, had to see the worst in their lifetimes. When it comes to MSMEs, a recent commonly quoted survey indicates that this segment of the economy had an income hit, which is quite substantial. As we know, the impact is different for different MSMEs and micro borrowers based on their nature of business, maybe essential, non-essential kind of thing. And based on different geography, depends on the length of lockdowns. So the many have different type of hit actually. So which are the economy is impacted based on few different fundamentals. One is demand reduction due to lower footfalls. Liquidity is used to manage the working capital cycle. Credit constraints, particularly MSMEs, which are very small units. So now that with demand picking slowly, everyone, including the government and regulator, also doing their bit on supporting this crucial sector of the economy. Specifically, when it comes to microfinance customers, we have seen a wide range of resiliency within this segment. Important to note that rural and agri sector was a kind of silver lining in all these unprecedented situation. There's a big sub-segment who did not avail second moratorium and have been regular in paying and availing credit from July timeframe onwards. These are customers who are engaged in essential services relating to agri, allied, animal husbandry, essential trade, or in tier 2 and rural areas. At the same time, there is large subsegment who are still struggling to meet multiple financial needs, both from business and personal finance standpoint connected to the ecosystem, such as pilgrimage. And apart from Santosh, what Subrataji told, there are the whole ecosystem such as pilgrimage locations, temples, tourist destinations, large IT corridors, resorts, beauty parlors, hairdressing salons, so on and so forth. Such economics are in still difficult situation to generate cash or generate footfalls. Some of the key things that we and many of our segment are doing to support micro enterprises in general and our customer in particular are the below one. So enable credit and liquidity for customers at appropriate level, like what Subrataji said. Ensuring regular credit availability based on the need at regular intervals is very, very important. Those who are paying well, obviously they will get the credit on a regular basis. So but we need to also look at those who are not able to generate enough cash. Like the case of Santosh, how can we put some more money in his hands to start his business and then start from there, pick from there. And similarly, flexibility in tenor, like the product, what he told, is important. The flexibility in tenor, flexibility in EMI so that the longer period of tenure, so that EMI is lower, so he can meet the outgo. She can meet the outgo with the lower EMI. We need to reinvent such kind of products which can help them and have a lesser outgo for some more time till the economy limps back for him for the normal. Hence, long tenure personalized loan product are the key now. This step will help to manage their cash flow. And provide restart capital. So there are lot of time, somebody is not able to pay, the lenders shut their door for them. It is in this situation, it is very adverse to the economy, very adverse to customers. So there has to be additional funding, maybe restructuring. So those innovations are very, very important. Even regulators also helping, the government also helping in such cases that MSMEs who have a difficulty because of COVID situation, the sector need to support with the restart funding. So that's very important. And also leverage with the government and regulators who have various schemes are provided for access into credit, the access into the liquidity, for the various inter-subsidy schemes which are supposed to enable such one-time loan securing. So these are to be provided to customer. We see there are a lot of inter-subvention from NABARD, for example. It is very important, Mudra. So it is important to get such facility which is provided by government and reach it to the MSME segment or the low level of customers. It's important for all of us to do whichever the facility provided by the government to reach it to them. That is again very, very important for all of us. In conclusion, at this point of time, rejuvenating the MSMEs is imperative for a strong growth of the country, and MFIs are the best to support this need. The most vulnerable section of the population and the economy is the most impacted in this crisis and rightfully requires support from all stakeholders to rejuvenate, not just MFIs. We from the industry with strong sense of the pulse of the customers are continuing to innovate to help and enable customers to tide over this one of a lifetime crisis. Lenders need to be proactive, need to understand the pains of the impacted borrowers, and need to support with patience and innovation. All we hope is that we do not fall into second wave or third wave of pandemic. Such an event could potentially derail the current economic situation once again. So probably I will stop here and then for further conversation. Before that, I will just respond to Subrataji's comment about the cost of lending. I think for the NBFC MFIs, there is a rule which you can't. So when there's a regulation, automatically when cost of borrowing comes down, we have to replace it. For example, Credit Access Grameen, in the last 12 months, our cost of lending has come down by 1%. So I mean that's the way. But what we means basically the entire ecosystem need to work is why not entire microfinance customers should get this benefit, not why only for NBFC MFI customers will get this benefit, because NBFC MFI is only the 30% of the whole MFI lending in this country today. So I think that there has to be enough support and advocacy with the regulators that such kind of protection in terms of pricing should come from every lenders in this country to this segment. Instead of institution point of view, it has to be asset class point of view. So every MFI customer should get it, not only from NBFC MFI customers. So I will stop here. Maybe I will look forward for further conversation on this. Thank you.
I would now request Manojji to give his feedback and comments with respect to the issues which we discussed already, as well as talk about a bit about how we can perhaps think in terms of reducing cost by using technology and things like that.
Thanks, Sutaji. Thanks, Charan Singh Saab and the EGROW Foundation. I think Uday is the man in the field. I have information from a month or so ago when the repayments had gone above 90% on a monthly basis. but overall the sector is still looking at somewhere around 60% of repayments coming in, because the earlier months when the lockdown happened, repayments did not take place. And as Uday also pointed out, there is a feeling in the industry that had digital channels been made available, at least 50% of the clients would have loved to repay. Because 50% of the typical microfinance clients are in the essential services. So they'll have a kirana shop, or they are into agriculture. So their income streams were not really impacted. They were functioning pretty much as close to normal as one can get in such a situation. And they actually had needs for credit, and they were willing to repay if those needs could have been fulfilled. Somewhere I think this over dependence on the physical interface, which is a great thing. I mean, the microfinance industry, actually, this is one of their strengths. But the absence of a digital channel to connect to the client also did not help in this case, because somewhere the feeling was that at least 40 to 50% of the clients would have repaid, and we could have further supported them with credit. So I think that then takes us to, what should be the digital architecture going forward for microfinance institutions, and what works in the best interest of the clients. So if you look at microfinance in India, I mean, we are the most efficient lending machines that have ever been created. Microfinance institutions in India are really very, very efficient. I mean, you compare with microfinance anywhere globally. You go to Southeast Asia, you go to Latin America, you go to Africa. We are the most efficient and we are the most cost-conscious lenders. Partly it has to do with the regulator, RBI, which has been on top of things, has sort of put a cap. Partly is also a result that India has scale, and to get to that scale, most organizations have had digital platforms available. Now, digitization has three elements. I mean, when you talk about digitization in the microfinance context, there are three elements. One is that, do I digitize the backend? Most institutions in India would have completely digitized the backend processes by now. Then there is a middleware. My field officer is going to the field, and then from the field, data is being fed into the backend systems. Is this element digitized? And a lot of institutions today will tell you that they have tablets, or their field officers are going with smartphones, and they are capturing the data itself on the digital device. So that from the customer interface and backwards, everything is digital. This is work in progress. Some MFIs have done it, some are in the process of doing it. So this is not a universal thing, but backend, most of them have digitized. What we're talking about in the next level of our next phase of digitization is the client onboarding and client interface digital or not? And that is going to be the next level of digitization that will happen. And before I sort of talk about, what this is, let us just look at and segment the Indian sort of, population, adult population segment. Totally estimate that the Indian adult population is about 950 million people. If I look at households whose income is more than $50 a day, I'll repeat, households with income more than $50 a day, it is about 3% of this segment, 950 million. So roughly about 40 million people are there in this, where the household income is more than $50 a day. The next segment is the $10 to $50 a day. This is about 20% of the overall. So about 260 million people. So actually this sort of high income that we talk about is just about 300 million odd million people. Yeah? The next level is the $2 to $10 segment. And we actually segment it in 2 to 4.5 and then 4.5 to 10. But this is a large segment, about 47% of the total. And this is about 600 million people. Yeah. This is where a bulk of the microfinance lending actually happens, this $2 to $10 segment. And then you have the ultra poor, which is less than $2 a day household incomes, about 400 million people that are completely, entirely dependent on government subsidies and government handouts for their subsistence. Of course, they do some activity or the other for income, but the less than $2 indicate that is a very low. if we were to then superimpose gadget ownership, because the moment we are talking about self-initiated transaction where people are technologically accessing a service, we are talking about people having smartphones. So this population then segments into three levels. There is one segment that has smartphones. There is another segment that has feature phones, the basic phones, and a third segment that has no phones. So the typical microfinance clientele is the segment that has no phones or has feature phones. Of course, some of them will have smartphones. I mean, the more urban you get to, they will have smartphone ownership. And that is a phenomena that we see will increase over time. Now, the next issue is that what time frame are we talking about for this segment to get to smartphone ownership? In its normal course, it would have taken probably 10 years or more. The whole issue is that will this pandemic make people get to aspire for a smartphone ownership earlier? And will it also, encourage institutions such as Grameen that Udaya leads to lend to people to acquire smartphones? Now we are seeing some evidence of that in the field. So there is one institution here in where I come from in UP, which is saying that for every center, and typically a group in a microfinance setting is 5 women, a center is 20 women. So they are saying that for every 20 women, we'll encourage 2 of them to take a loan to get a smartphone. Yeah, I was very surprised that one of the largest distributors of Samsung smartphones in India is actually a microfinance institution. So in fact, Udaya, Anup was telling me, Anup leads the Sonata, that if you want a cheap Samsung smartphone, tell me, I'll get you the best rates. Because they are the biggest smartphones. Yeah, this was huge news for me. So what they're doing is they are saying that can we get 2 women to take smartphone ownership, facilitate digital payments for this entire group of 20 women. Now, that's not going to happen free. What will happen is they will start charging 10 rupees to the other women to facilitate that transaction. But for me, what is interesting is that there is already a move towards getting digital interface to happen and happen at the level of the client. Right now, it happens at the level of the field officer. And from there on, everything is digital. But can we move this frontier to the level of the client? I think that's what we are talking about. And we already see elements of that pushed by the pandemic. So the pandemic is, it has been a huge challenge. We are all sick and fed up of it. The poor people are struggling because it has impacted businesses. But not all will be bad about this. When we'll reflect on it 5 years later, we'll see that it led to things that would otherwise probably have taken a lot of time. Yeah, and we already see elements of that happening in the field, and that's very, very interesting, very, very encouraging for us, because it then allows organizations such as Grameen and Udaya to then cut down on costs. And if they cut down on costs, they will pass on those cuts to the people. I mean, that's what we see is the inherent sort of end goal that could happen with greater technology. So I'll pass on the the speaker back to Subrata ji, and then happy to sort of come back again later.
Thank you, Manoj. I think you have raised some very important points as well as Sudhir. Am I audible?
Yeah.
Okay. There are a few things which, on the basis of the discussion points which you raised, a few things which I would like to add here. Based on, again, on the basis of last 10 or 12 months experience of whatever I have seen in the field. Now, I think for a group of 20, giving two smartphones is too less. I'm telling you why. The demand for there is another reason why demand for smartphone in rural areas have increased tremendously, and that is education. And somebody has to fulfill that particular need. It has to come from somewhere. Maybe the same phone can be used also for microfinance purposes. Like, for example, if you give the loan, the child goes to education, first uses it for studies, and maybe the mother uses once in a while only for making the repayment using the app which is there. So there could be the demand for smartphones, at least one thing is for certain, is much more. This is purely based on my personal experience, simply because, again, it is purely so close to me. My maidservant's daughter actually studies in class 11, and her mobile phone stopped working. She didn't have any other choice but to take some advance payment from me for buying a smartphone for her daughter. So that's and I believe in rural areas also. This is one thing which will be very much required, at least for the next 4 or 5 months, or maybe slightly more, till the schools fully open, till the vaccination reaches the rural areas. As per the information available, 20 to 30 crores will be vaccinated by June. That is what the news is. So if that also happens, that is not covering the full population. It will take some time. So maybe somewhere next year, till next year, and once that triggers in, this digital education system triggers in, maybe digital education will continue in many other areas. So that is one area, one thing which I wanted to point out. As rightly pointed out by Manojji, there have been a lot of changes which perhaps is for good because of this particular purpose. There's one more thing which we must have observed in the field level, is that people who are able to adapt to the new situation have been able to survive the thing better. Because, for example, switching over from selling newspapers to simply masks is something which I saw in front of our campus. It's something which you have adapted for change from one business to another business altogether. Now, that is another thing which, and maybe in some cases for that, maybe some kind of a skill set development or skill development may be required when it comes to micro enterprises properly. I'm not talking about only business. The third thing which I would like to point out with respect to technology is that just again another example, Srijan naam ka ek society hai. There's a society in the name of Srijan here in West Bengal. I know the person who started it off, and he's a young guy, and he was earlier with some foreign international bank, and then he was in US and then from Singapore, and then suddenly one fine day he felt that these are things which I need not do, and he came into microfinance. Now this society is basically not for profit type, so they don't make any profits, and so they had problems in terms of getting funding. He says that, hey, I don't want profits. Being a person who has technology background, he has developed a model wherein he practically, once the customer is given a loan, as you rightly pointed out, there is a interaction in the beginning when the group is formed and things like that. But after that, he says that if the customer is good and the group is good, the loan can be done again or given again without even getting in contact with them. And he is keeping contact with the customers only through SMS. And that too as a reminder that your loan repayment date is on such and such date, your group repayment date is on such and such date. And he is using the technology which is available in the market, that is eNACH. So it is something like using the present day technology which is available and trying to make things cheaper using technology can be one of the alternatives, as rightly pointed out by Manojji, by which perhaps we can reduce the cost and maybe pass it on to others. I think I would, if Udayji has something more to say, I would request him to add whatever he would like to put forward, and
Sure.
then we can go forward.
Yeah, I think, I completely agree that there's already a journey toward digitized operation, as Manoj rightly said, backend or connecting to customer data capturing, all those are digitized by everybody. I think I don't think there are many exceptions that they're still doing manual. There are many things that come. When we go to the third leg, where the customer's transaction digitization. Manoj gave some example and Subrataji gave some example, which probably still many are assisted digital transaction. It's not digital. Okay, it's still assisted digital transaction. Where if you have to be completely digitized transaction, you need digital literacy to your customers, digital ecosystem availability with them, whether smartphone, whether bandwidth, whether the digital education, that is necessary, and the digital infrastructure. So all these necessary, which has a challenge. Think about a woman who sells vegetable in a village. So we can force her to do a transaction digitally by getting her a smartphone. If I do that, to do my transaction, actually I'm selfish to collect my money by digital. Can we do how her entire business go into a digitized way? How everybody in the village pays to her non-cash? That is important actually. Unless that happens, we are trying to collect the money to digitize is nothing but selfishness of the lenders. But that's clearly my way, my view about it. We need to enable the customers to do their business cashless. To get that, then there is a real trigger for them to do all transaction cashless automatically. Even if you want cash, she will not give cash. That's simple. Okay, that is where we need to look at. What is happening today is all of us are pushing to do our transaction on cashless. I think enabling the entire system, whether it is by government, whether by institution, whether it is by every stakeholder, is more important. Digital awareness, digital literacy, digital ecosystem, digital infrastructure. These are most important for this kind of customers who need to get into system. They will come on the way. It will start from the metros to tier 1, tier 2 cities, like slowly it moves. Maybe the pandemic has triggered a little bit. Now the education moved there, maybe ticket booking, something moved there. Slowly, all will move. Maybe another 3-4 years, majority of them would do transaction. But microfinance, our view, still remains going to remain a high-touch based business. Your transaction digitization will help you to build more relationship, more trust. So that you will get extra time to manage the relations and then see how well you can serve the entire family with more products and services. So I'm not sure the cost will come down. Cost will definitely come down because of the efficiency what you built. But digital transaction process, I'm not sure. It may be very small because this type of technology is a high cost technology. Repeated changes. The app gets changes in 3 months time. You have to change entire thing within next 6 months time. So there are so many costs connected there. It's more of a convenience, more of a extra time you will get for other activity of relationship. So I would love to leave it at this point of time on digitization. So everybody will grab this opportunity. We should be ready to take this as it moves, as the situation, as the infrastructure, as the ecosystem changes. Every institution should be ready to move that direction and take it to the next logical level. That's very, very important. And the other one, what Manoj said is about the particularly lend to acquire smartphone. I think each of us need to look at what's the need of the customer. If need of the customer is to buy for more mobile phone, I should give for that. Need of the customer is to buy bicycle, I should give. That is what our whole thought process of Grameen is, to provide for their life cycle needs. Whether it is for mobile phone, whether it is for bicycle, whether it is for cook stove, whether it is for medical emergencies or connecting water, repairing home, it could be anything. It is images. So we go by a credit line kind of situation to customers, so that they can choose to borrow for any purposes. So I think if lenders start providing such kind of need-based requirement, I think that will get fulfilled automatically. That will get fulfilled automatically. I think all of us need to support the need-based the loans or facilities to customers, even in this pandemic, to rejuvenate. That's most important. What is the need? Whether just renewal, whether to restructure, whether to give additional funding, whether to give additional infrastructure. I think we all need to find and provide that. With that methodology only, we can actually rejuvenate the situation, enhance the capacity of the customer, build the skills, give the education, give the literacy. Many of things we can do. I think it's important, and it will definitely will happen. It will have its own journey. It's already, for example, Manoj, just for our information, all our customers are enabled for paying through Google Pay, FinPay, or BBPS. In fact, every day more than 4,000 customers pay through this channel also. So everything is available to customer. It's available to customers to do that. And also we train them wherever possible. We train them how to do this. Okay, I just leave it here for any further questions.
I think very valid points mentioned by you. When I said about mobile phones being needed at the rural area, it was completely for a different purpose, not just transaction of microfinance. Because now, as you have seen in most of the places, children are using only WhatsApp and this thing for their classes and listening to lectures and things like that. It is for that particular purpose I was talking about. That will be the main purpose. Microfinance will be just piggybacking on that. That was the idea which I was trying to float. Not selling, pushing mobile phones as a tool to benefit us. That was not the intention which I had. I would like to make that clear. I think you are also correct in terms of pushing technology. I think we can push only up to a limit. Beyond that, it has to be the absorption capacity of the customers and to what level they will absorb for, and which in turn will be affecting helping us in terms of reducing the cost. That is fine. I would also like to add here with respect to the product part of it, where I believe now it is something which is a thought that individual evaluation of the activities which are being undertaken by the customers is absolutely essential for the microfinance industry. Because it is only then, as Udayji pointed out, that we will be able to understand really the credit need of that every individual, and that gap has to be fulfilled so that we can make that particular person stand back on his feet. I think many of them have really lost their business during this particular period, and as you rightly pointed out, around religious places, even in office areas where IT parks are there and things like that. I think like if I go to the Sector 5 in Calcutta, it used to be filled with shops around on the roads, and now it is practically they have reopened along with the reopening of this thing, but the buzz which used to be there around that, because NABARD office also has shifted in that area, and I visited that place quite a few times before the lockdown. The buzz which was there in that particular area was completely different before lockdown and what we see now. It's a completely different scenario altogether. The food stalls and all that have not opened practically. Very few of them, only selling chips and all that packed foods, which perhaps will not be contaminated, or the fear is not there in terms of consumption and things like that. Manojji, if you'd like to add anything, and after that we will be opening it to the people for questions. I think Daviji has already put quite a few questions, which has to be answered by Uday Kumarji. We can see it in the chat if you want to.
Sure. And I'll just take minutes and then open it up for the question answer session. But basically what we are looking at is that will digitization lead to what we call as greater amount of digital footprints of micro enterprises and poor people. So when we say that, what we mean is that now there is with the Bharat bill payment system, most electricity and water billing payments are being encouraged through digital channels. Now, this obviously leads a digital footprint. You know how much this person paid for an electricity bill. Similarly, GST is creating a very large digital trail. So now you know at least how much goods have been acquired and you can try to estimate what kind of a turnover this particular business is making. Over a period of time, because the government is pushing the digital agenda quite hard, we'll see that the digital footprint of micro enterprises and to some extent of low income segments in general would increase. Does that open up an opportunity for a greater digital interface? Right now, the reason it is so difficult to make a loan of 2 lakh of rupees is that it probably costs 30,000-40,000 just to assess that income, that application for loan. Because everything is physical. You then need to see, is this guy fudging some numbers? Is he really having that kind of an inventory, and so on and so on. The moment we move to digital channels, will it enable us to do an assessment that is more driven by credit engines? Now, it is work in progress. It is not done in any part of the world with any level of sort of efficiency, let us say, but it is increasing. If we look at the country that started down this journey the first, it was Kenya. Kenya always, it's a little ahead in terms of digital payments, digital credit. And between 2016 to 2018, 86% of all loans made in Kenya were digitally made. Digitally made, I mean that the client interfaced with the institution on a digital platform. Typically a mobile phone. So client interface happened on a mobile phone. And there are more than 50 fintechs that exist in Kenya today. But most of the loans are made by banks and microfinance institutions. So 97% of digital loans are actually made by incumbent players. So obviously there is a technology acquisition that is going on in parallel. But not all is good about it. As against physical loans where default rates are 5% in Kenya, digital loans carry a default NPA rate of 16%, 16% between 2016 and 2018. But it is a downward trend. It's a reducing trend. So obviously, as they are learning, they are able to build better algorithms and are able to reduce the NPA levels. But it's still significantly higher. The reason it sustains is that interest rates in Kenya are phenomenally high. We are talking upwards of 50-60% at least. But what is not so good is that 2.2 million individuals in Kenya, poor individuals in Kenya, are on the blacklist because they have defaulted to one or the other digital lenders. And that means that almost 16%, 16% of the Kenyan adult population is on the credit bureau blacklist. That's not a very good sign of inclusion that is happening. So as India too goes through the digital journey, which is inevitable, whether we do it today, tomorrow, or after 5 years, the journey to digital will happen. Yeah, it will. It's a phenomena that is unstoppable now. Just look at how many things we used to do physically that we now do on our smartphones. So it's a trend that will continue. It's unlikely to stop. So as and when this happens, what we need to see is that how do we best protect the interests of the low-income segments, the micro enterprises, even as we bring in efficiency, better products, better access to this segment, and better credit underwriting practices. That hopefully we can do with digital. I think that's where a mix of physical, that is the forte of microfinance institutions, and digital is required. Probably a complete move to digital is not something that might work for this segment, but we definitely are on this journey of digital coming in. It'll be interesting to see what level of physical and digital combination finally, makes the right impact on this segment and is really allow institutions to have the outreach, the interface that is required. So that will be very interesting, but the digital journey, it's going to happen. Yeah. So
I too.
You mean to say what shape it will take? What shape it will take is not still clear, but it is there. It has to be there. You don't have a choice.
Correct.
I think that is how it is.
Not just Kenya. Maybe in India also the fintech lending today, probably the interest rate is far higher, and similarly delinquency is far higher. We don't know where we will reach. Where we will reach. But of course, that's a journey. Of course, there's a journey. It will go on, and But in Kenya, Manoj, you are seeing reduction in delinquency, not because it's improved, because 2.2 million have been blacklisted. You are not lending to them. So that you are lending to buy. How do you lend them again? Actually,
it's a very good
the reason
point.
is that not because of the improvements in
point. Yeah.
Correct. So anyway, so I think the journey will definitely happen. I think India will innovate much better in terms of controlling cost and controlling delinquencies with all the best brains, best systems, best technology, best efficiency, and best manpower. It's possible. This is what, when I compare to microfinance compared to Indonesia and Philippines, which I have direct access, this is much better in terms of efficiencies, in terms of manpower. Understanding of the segment is much different. Same in Philippines, the microfinance charges about 60-70%. Operating cost is around 35%. So That's it.
Okay, I think we had a round of discussion. I think I would thank both the panelists, Udayji as well as Manojji, for contributing to the discussions. And I would now pass it on to Professor Singh so that he can put forward the questions. But I can see the questions in the chat which have come forward. I think the first two questions positively goes to Udayji, I think, because Udayji and Manojji, I think, has the outreach of MFIs increased during Corona times compared to the growth in similar period of previous year? And two, is there any indication about how much top-up loans to existing customers would have been given by MFIs during this period? I think based on your experience, Udayji, you can give a feedback.
I will respond to this. So based on data between April to August 31st, during the moratorium, majority of the customers have taken moratorium. I mean, entire industry, at least the first moratorium till June, everybody, I think by default, everybody have given the moratorium. So there is no question of even collection or lending, both happened. And the second moratorium, it was by choice was given. The moratorium was given by choice by many of the institutions. But I think they're restricted to lend to the borrower who are completing the cycle. As you know, in microfinance, every 12 months, 1/12 of the customer completes the cycle and you need to renew their loans if they want once again. I think predominantly till September end, institutions would have given more to the customers for renewals, or maybe some need-based, or Grameen, for example, we provide need-based with the kind of limit kind of thing, additional requirement wherever needed, but only to the groups where they paid properly, because every institutions want to watch a bit of the collection trend before starting the growth. There was also the constraint on many of them about the liquidity also at that point of time. So I think during the Corona or during the majority of the lockdown period, moratorium period, I think there is no growth happened. I think it's a degrowth happened in terms of portfolio for the entire microfinance segment. Top up, maybe some of them would have given based on the need to the customers who are already paying well. There's additional need for or to restart, people are given, but we really don't have data for that at this point of time. It's an individual institution discretionary to start. Depends on liquidity and depends on demand from the customer side. But it happened to some extent. I know that, but we don't have the data for that. Maybe farming, maybe I think Subrataji, you will respond to that.
Farming is going uninterrupted. That is the next question which is there from Mr. Prasad. I think KBS Prasad has raised this issue. Farming is going on uninterrupted as far as our experience shows at AME Foundation working with smallholders. Can there be convergence between FPOs, Digital India, and MFI for better ecosystems with individual investments?
I would respond. But I would respond partly to this. Farming and microfinance are looks together, but actually they're different. You know, the requirement of farmer is much bigger than what a MFI can lend to them. The MFI lending is very small portion of it. Maybe the farmer's wife can go and borrow from MFI for 30,000 rupees for something, but in reality, for farming purpose, MFI will not lend because the requirement is very large. But there are some participatory, part-time growing in the backyard, fruits, vegetables, that kind of thing will happen. But that entire direct farming point of view, the entire micro lending is maybe just 8 to 10% requirement, not more than that, because the current regulation will not permit to lend to large extent. I mean, the higher ticket loans by microfinance institutions. Whereas it is possible under SHG, under FHG, SHG, FPO model, it is possible, but difficult in terms of microfinance.
I think you are on the dot with respect to the response which you have given. There can be convergence only from the SHG angle, but from the GLG model, which most of the microfinance institutions use, I don't think there's a possibility of convergence between FPOs, Digital India, and MFI. there could be issues of a different kind altogether. Then can government take more initiatives to train the SAG members in this pandemic time? I think this is a question by Girish Shanbag. I personally believe they can, but the point is, just like the pandemic is a problem for them to get an income or continue with their activity, who is going to go and train them and in what area? I think skilling is something which will be required. I'll come to that with another question which has been put forward here. Government can take more initiative to train SAG members in this pandemic time. Yes, they can. But the point is, how do we go about it? That is more important. Telling that, yes, we need to take more initiative is one thing. But getting down to the brass tacks becomes slightly a problematic area. Like, for example, if in this particular situation where you have a scenario where even schools are not functioning, which is perhaps the base of training, I would rather put it that way. Can we go ahead and have training programs for SAGs? I have my doubts with respect to that. There's another question which has come, which says, how do we manage the migrant workers getting back to their villages? They are all physically fit children of farmers. Because of the bad experience in the cities, they might not go back to the cities again. What about this section? Yeah. I think this is a very interesting question which has been put forward.
Yeah.
There is a question by Mr. Tripathi. He just wants to ask that question to the panelists. Can I request him to ask the question personally?
Can I finish this one? We finish this one and then we can go ahead with that? Because these are there in the chats.
Sure.
Udayji, you would like to put forward something?
Yeah. I think this is about migrant workers is one of the things. Highly talked in terms of TV channels, debates, everything happened on this. I think my sense this is an opportunity. Actually, if you look at the migrants, so I think everybody will not stay in village. Many of them will go back to the former places, but maybe the kind of 60-40 kind of thing. Maybe 40% of them will remain in rural. They would start the new businesses. That is an opportunity for microfinance institutions. I think that with the higher skills and higher abilities, there will be more small business and MSME kind of things in the villages because of their knowledge, what they came up being in cities and with their information availability. Definitely they will start good micro units and definitely they will grow well, which is opportunity for microfinance institutions. And then many of them will go back and do their earlier job and worker. Top of that, there is enough support from the government in terms of the enhanced MNREGA, in terms of the job opportunities and then the payment opportunities. That also has added a helping hand for such migrants who have gone back to villages. I think these are the three things I could respond on this.
Manojji, would you like to add something, or I have one thing to say on this?
Sure. We are seeing that fertilizer sale in rural areas has significantly increased. So one of the and there was actually quite a bit of a even the government was a little bit surprised as to why month after month fertilizer sales are going up, and in some months it was double the previous year's corresponding month. So one of the reasons is, of course, that people were worried that another lockdown will be imposed. So let's take the benefit of this opening and stock things. But the other is that people really, and the area under cultivation for this season has gone up, which indicates that people who have come back are more interested in going back to farming. So we'll actually see a bumper crop coming up because there was uncertainty in when will cities open and when will we go back. So people have taken to farming in greater sense. But we'll also see as the economy starts reopening and businesses start to function that there will be a backward flow that will start happening. We're already seeing that in states such as UP and Bihar, where people are going back because there isn't enough to do in rural areas. So it's a mix of these two, which will happen before an equilibrium is again reached.
There's one thing which I would like to add here, which is on this particular point which has been mentioned. It will depend on what skill set the person was using in the cities for his survival in the rural area. I think it ultimately boils down to that. For example, if a person was simply a taxi driver or something like that, and he has come back home, chances are that in deep rural areas, his skill set may not be used to that extent. He may have to develop some kind of a skill set because otherwise he has to own a car to give that service, taxi service or things like that. But if the person was into something else, for example, some kind of a stall or something like that, which he was selling of maybe pani puri or something like that. I'm talking about a small vendor who may be there. Chances are that he will be able to use his skill sets to open a shop, and maybe financing such people will enhance the activities in the rural areas. Many of them, as pointed out by Manojji, would rightly go back to agriculture, and that is also happening. Many of them will be absorbed, or they will be getting into agriculture. That is why the area has gone up, as he rightly pointed out. But this is what I personally feel. This is how the things will go. There will be some who will be going back because their skill sets don't fit and they are not able to reskill themselves. For example, the example which I was giving of a personal help or a taxi driver who is there, who is working in a rural area, who was working in maybe Mumbai or Calcutta or Chennai or something like that, and has come back home. And now that kind of a personal help or that kind of skill is not required in rural area. So, and if he or she is not able to reskill himself, chances are that he will go back to the urban area. Whereas there are people, so skilling becomes an important factor if the person wants to stay back. So that is one area which needs to be looked into. I think government is spending quite a bit under the Skill India campaign. So maybe this is one area which can be looked into whenever they are think of conducting programs and things. That is one of the things which I thought I should point out. Charan sir, you were talking about a question you said that there's a question, someone wants to ask a question to the panelists.
Yes. I think Mr. Tripathi.
Yes, sir. I have a question for all three panelists. This is Krishnanand Tripathi from ETV Bharat. I just wanted to know what is industry experience, what are the changes that you people have noticed during the pandemic as far as microfinancing is there, whether there is any change in the purpose of borrowing and in the ticket size of the borrowing, and what is your view on the Prime Minister Swanidhi scheme that is for street vendors?
Maybe I'll respond first. Maybe then something is there. One is, as I said earlier, during the pandemic and during the lockdown period, there is no much lending happened due to obvious reason. One, they are not able to reach, or more of them are moratorium. Some of them are liquidity issues with the institutions. The lending was basically it's a degrowth at that point of time from the industry perspective. And even there is a lending is there more of a renewal of the customers who have been paying and their loan are matured. So to that extent, there is no, I mean, there is basically renewing for the business what they have. There's no significant change in the purposes of borrowings. So some of the innovations, I can't say innovation, what are the preventions institutions have taken is maybe with the restricted center meetings, instead of entire center meeting, maybe 1/4 of the center meets every time, group meets every time, and the travel of the customer is restricted to the branches, which is cancelled, so that you are able to do transactions or a transfer of money directly to their bank account, so that they can draw from their bank, so that they can avoid public transportation. Maybe reduce the paperwork for loan applications and such things, and contacts continuously through SMSs, audio, video communications, which enabled, so that creating the awareness about the corona, about the preventions, about the the actions to be taken by them, about the social distancing, about their health factors, and about the moratorium, because moratorium is a subject which cannot be understood by everybody. There's a huge training you need to do for such customers who are underprivileged. Actually, that was one of the most important thing done by many MFIs actually. So making them understanding is most important. I think that's what probably is my response for this question. Manoj, if you have anything to add on this.
No, I completely agree. We saw some evidence of people saying that they would like to diversify income. So if their business was closed, then the business was really impacted, then there was some demand that, give us a loan so that we can start another thing. But if the business was doing fine, then, I just need more loans to grow that business. So there was some, need to, and people felt the need to diversify, especially if their business was impacted significantly. Swanidhi is a great scheme. I mean, there's a dire need to because the credit to flow to this segment is so difficult to activate. I mean, it's the whole it falls in that famous missing middle segment, and because most microfinance goes to women, of course, it goes to men through women, but and street vendors as a function are largely male-dominated fashion. So, I mean, the credit flow through formal channels to this segment has been an issue, and I think it's a very timely thing. The whole challenge, of course, is that how do you reach out and how do you identify this segment, and that's where I think the struggle will happen. How do we reach out to this segment, and how do banks and institutions get to identify this segment? And I think that's where there will be some level of effort to be needed.
See, I think it's.
Sir, I have a follow-up question.
Sir,
I have a follow-up question. With the increasing use of digital technologies, how can you help in increasing the financial inclusion, microfinance companies?
No, I mean, I think digital ability of the institution, microfinance have already keep going up actually. I think by and large, from acquisition till lending, I think by and large everybody have digitized actually. The process is seamless to many, and the data is seamless. I think that only will be more helpful and more supportive to enhance the financial inclusion. But important is to enhance their footprints towards rural, because today who is that not part of financial institution, financial inclusion or an unbanked territory? Our understanding is about 70 plus million of unbanked population or households are in rural, not in urban, which is important. I think the most important and crucial is MFIs or all these institutions. I just don't want to restrict MFIs, because under the MFI segment today, MFIs are just 30%. The banks and SFBs and NBFCs are 70% actually. All of them need to move towards rural is most important to complete the inclusion part.
Thank you, sir. Thank you, sir.
Singh, I think you can take over now. I think we have answered the questions. I think are not there, and I think we are more or less just in time. 5:30 to 6:30 presented, and 6:40 in the club.
Maybe I'll give a small add-on to the PM Swanidhi what Manoj said. I think a bottleneck is the value of loan, which is restricted to 10,000 rupees. That probably is not so motivating for this street vendor to get the license or whatever the minimum municipality licenses. Such kind of thing are compulsory for this kind of loans. That the enthusiasm is quite less what we observe, because of maybe the value. Two is the licensing or approval or the identity card requirement from the municipality or the town. These two are not much encouraged there. I think that's why it's taking a little slow. Maybe it will take a little more time.
Okay, Dr. Singh, I think
Yeah, but there
you
are
can take over now.
There are a couple of questions from Mr. Dadi and Mr. Girish. Do you want to, Dadit sir, do you want to ask those questions? Or similarly, Mr. Girish, do you want to ask those
Yeah,
questions?
I can see Mr. Dadit's question, particularly how you will help the financial graduation through cardinal principles. See, I agree that the joint liability is an entry for the such informal borrower to get into formal borrower. I think institutions need to go on helping them to grow in the financial abilities. I think so. The direction of a JLG member over a period will have to move into a missing middle kind of thing and into an entrepreneur kind of thing. And the institution need to facilitate the products to go on supporting them. I think some of the institutions, larger one, are doing it already, like Grameen. We started the individual lending model. After a kind of 2-3 years of experience in microfinance, actually they can go to individual and access the individual borrowing, where they have a stable business and stable cash flow. They can actually move into individual borrowing and they can become entrepreneur. So I think larger institutions already started and facilitating this, and eventually they will go to they will go to bank when they become a self-employed. Then they become a SME kind of thing. When they start borrowing 5 lakh, 6 lakh, they can actually build their credit history well, build their transaction history well, and they can access low-cost funding from banks.
Mr. Kumar, my question was actually that how the microfinance institution develop the borrowers. Principal is development to other social developments. So what the microfinance borrowers, and what is the progress of the graduation process? Means out of the 100 borrowers financed under the microfinance, how many have reached to the banking level? That was my precise question. And I'm very happy the practitioner gave a very rosy picture. But what exactly have been the process of the graduation? My association with the microfinance, right from its inception. I was working for the microfinance cell, and myself and Thomas, we actually were the instrumental in suggesting to Dr. Vimal Jalan that the multi-institutional approach in the microfinance should be developed rather than the only SNC group. So that way all institutions came into the picture, and I'm happy that a lot of work has been done. But what exactly is the process of the development of the cardinal principles? Thank you.
Sir, great. I will probably I have taken the graduation of the customer into a next level. I agree with the principles that the customer need to move into a formal borrowing from the banks. But today, if you see, sir, what is happening? The microfinance has replaced the money lender, actually. Where the money lender moved to the next level of more than 1 lakh rupees. Because microfinance is restricted to 1 lakh rupees or 1.25 lakhs. So money lender moved to that level, actually. So the why I'm bringing this item is microfinance is an unsecured form of borrowing. Even if customer want to go to bank, whether the bank is interested to give that kind of loan to this customer without security, without guarantee, without papers. So the problem is that there is an outlook change. Unless the bank sees the kind of ticket size, they will not be able to go. Nor the banks are able to go to rural to service these people. So they still remaining in the microfinance system or a missing middle system or with the money lender system still. Only Few of them, only when they reach to borrow 4 lakh, 5 lakh kind of situation, they're able to go to banks, or a banks are able to absorb them. But in case of rural, still there is an absence. Still there is an absence because everybody constrained to lend unsecured beyond a point. So we need to keep this in mind on these principles.
Okay, thank you.
Thank you, sir.
Thank you.
Questions by Mr. Girish. Mr. Girish, do you want to ask? Are you okay? Or do you want to ask your question?
No, sir. No, sir. No, sir. I'm happy with the answer, sir.
I think we answered that question.
You answered those questions. Okay. So with that, I must thank Mr. Subrata Gupta for having accepted this request of ours to chair the session and also be in panelist. And I also want to thank both Mr. Uday Kumar from Grameen Kuta and Mr. Manoj for having spent some time with us and discussing such an important topic today with all of us. As we have seen, there was lots of interest from the participants. We want to thank all the participants also for having spent a Friday evening with all of us today to discuss on this important topic. Next Friday, we have another discussion, and next Friday we have Mr. Kamath, former CMD, and Mr. Mohan Tankre, former CMD again, to discuss about the role and contribution of public sector banks in India. Same time, 5:30 to 6:30, we'll be using that time to discuss about the public sector banks and their role and contribution. I would like to invite all of you. The information will be on our website. If possible, I'll send you an invite also. But if I forget, then it's on the website. I'm requesting each one of you to please join us next Friday. With that, once again, thanks to everybody, the panelists and the participants who have spared such valuable time of yours on a Friday to be with us. Thank you. Good night. Take care.
Thank you, sir. Thank you.
Thank you very much.
Thank you.
Thank you very much.
Thank you.
Thanks very much.